Let's get it out of the way. Whether I'm here or I'm not here has nothing to do with the market and the volatility. I don't care what Tennessee Tomaducci tweets or what Dennis or Brent say. But I will say, whoo, there was some action to the downside last week. And are we going to have more this week? Well, we'll just all sit here and wait till Wednesday. NVIDIA earnings, right? We're not worried about the Fed, right? I mean, even though it's down 50% next cut, we're losing a lot of catalyst here, folks. But we'll talk to Jeremy Schwartz at 8:35, and he's going to set us straight on this market. Glad to be back with you all on this Monday. If you put some tips in, I'll let you know when my next vacation is. Let's get it started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, way off the pre-market high. We got over 6,800, folks. We got a big leak going on. Still up four handles, 67.59 the quarter. The buck up a few pennies here, consolidating at the 99 level. TLT down 33 cents. Wow, that looks like no rate cut coming. USO up 37 cents in the middle of no man's land. GLT, we talk about momentum lost, maybe in the gold market. GLD down 28 cents, 375.68. SLV hanging in there, up 44 cents, 46.40. In Bitcoin, wait a second. I got to reboot my computer. There's only 5 digits there, but it's up $1,000, right around the 95,400 level. Boy, did I miss Brent and Dennis, not necessarily in that order. Dennis, how you feeling? The few times I turned into the show, you were like hacking and coughing.
Just sick off all the time. Just sick.
I felt horrible. I felt horrible.
You felt horrible for me feeling horrible. Thank you.
Yes, I felt horrible. I mean, I tuned in a little bit when I got back on the boat from snorkeling and stuff, and I'm like,
I texted Brent, I think it was Wednesday night. I was like, I don't know if we'll be able to do the show on Thursday. Like, I have to see how this goes. But, then we toughed it out. I'm like, if Joel was here, I would say I'm staying in bed. But Joel's not here, so the show must go on. So we toughed it out last week. I'm still nasally, still coughing a bit, still, like congested. But other than that, I feel okay, I guess. So COVID part 10 here. No big deal. We rocked through that. The bigger deal is Joel's back in town, and the market is selling off a little bit here, though, from the highs. So that is somewhat concerning because everything was working smoothly overnight. The weekend trade was moving very smoothly last night. Joel is back. S&P futures were up 50 points or 30 points last night. And I'm like, here it is. But this was the graphic, the graphic that's been working. Ronan, Tennessee Tomaducci in the chat here created this for us. Joel Elconin, at work equals buy. Joel Elconin, not at work equals sell. This has worked for a long time. It's been a pretty good theory here because obviously Joel came in and we fooled us a bit because we had the pop on Monday. But then with the big sell-off Wednesday, Thursday, here it is. Here's the Joel Elconin sell-off that always seems to come when he goes on vacation. So it went down, down, down. And then Friday, we get the bounce. Well, guess what? Joel came back. He got back at noon on Friday. So I'm like, oh, it's the Joel rally. So I'm like, we just got to front run the Joel vacation and we'll all be millionaires. But, now I don't know because today we're leaky here. So it looked like it was going pretty well until about 3 or 4 hours ago. And we've had a steady leak.
Yeah. And when we were preparing, you said we're going red. And we lost some momentum. I mean, that's all you can say. I know a lot of people on Wall Street say fundamentals don't matter at all. They don't matter at all. Well, if you own this list of stocks, they do matter, and they matter a lot. And you're getting killed if you also could say, well, if you follow the charts, the charts took them up and then it took this out and you knew it was going down. But
Yeah.
holy mackerel.
I
high
mean,
beta
Connor
stocks.
Bates here put a great list together here. And I mean, this is tells you about, the carnage really. And this actually is after the bounce on Friday. So this would have been worse if you would have looked at this on Thursday night, but this was over the weekend. I mean, look at the drawdowns here. I mean, you can say the S&P futures, and if you scroll all the way down, it'll tell you how much the S&P futures is down. I think we're down about 3%. Not even. Down 2.68% from the highs. But look at these moves, man. 4.5 on the Qs. Look at some of these moves. Oklos, cut in half. Nebius, down 41%. IREN, down 39%. Ouster, CIFR, MP Materials, BMNR, there's our buddy Tommy Lee, Rocket Labs, ASTS, Anna, the IONQ, Circle, CoreWeave. These are some of the most loved retail darling names. That's what they all have in common. This was the retail rally in these stocks, and it's the retail sell-off here now. So just because your S&P futures is setting up here at all-time highs, and you're like, oh, we're due for a correction eventually, doesn't mean there haven't been some stocks that have been in a massive correction. There are stocks right now that are in full-on bear market. So it is the tale of two markets here, continues to be the tale of two markets. And I mean, if you were buying these nosebleed valuation stocks, you got the beats in the last month and a half. And you know what eventually was going to happen? We've talked, when you're paying, these kind of relative valuations, it's awesome when momentum is in them and they're going up, but eventually the momentum comes back out quickly. And that's what we saw in the last month as we had the inevitable Momo correction.
And I think the most important thing to keep in mind is that once these things are broken, it creates a whole new dynamic in the market structure, right? Because you got people that are stuck and they're looking for pops. Then you got people that were never in it, but yeah, I'm going to take a shot, at Oracle 250. They're stuck. And then you have the guys who are just the real short-term traders that look for, 98 standard deviations and they buy it. And then they're just looking for a smidgen of a pop. And so the overhead supply in these things, and CC's done a great job when he looks at the options market, like after these things fall and they come in and all the people get jammed in the option markets.
Yeah.
It's just, there's a lot of overhead supply.
I mean, I think Gabe's asking a fantastic question, a question that we've been asking in the STN room too. Are some of these names oversold now? Like bring that list back up. Is there stuff on this list that should potentially be on your shopping list? I mean, investable is tough because a lot of these companies don't even have any earnings. So, I mean, you can't just say, oh, they've gotten cheap enough the valuation starts to make sense. You never could value a lot of these companies on valuation because some of them don't even have revenue. Now, some of them do have earnings. I did start to nibble. There's a couple stocks that I've recently bought on this list. I did buy MP Materials, a half-size position. When I'm buying a half-size position, I'm not overly confident. I'm like, I'll nibble in here because I think rare earths are still a thing. I don't think it's over. So I think there is the point, that maybe, some of these stocks might be, the possibility to start looking and nibbling in. But I don't think you want to go all in, or you need to, wait for some strength in the sector because, this has just been so much carnage here that the highs for the year are in on these stocks. The highs maybe for the foreseeable future are in a lot of these stocks. I mean, when a stock like Oklo falls 49%, falls 50%, it's got to go up 100% to get back to just where it was a month ago. That's not that easy to do, especially when you don't have momentum anymore. So, I mean, it's a lot easier when skies are blue, blue skies are up there. There's no overhead supply. Stocks are at all-time highs. That's not the case anymore. Now you got bag holders central in most of these names. So the path to go higher becomes more difficult. But I think there is some stocks on that shopping list that are interesting. Nebius is another one that's interesting too. They do have the big Microsoft contract, which will give them some earnings eventually. I did take a nibble on that one there too. But I mean, nibbling is one thing. To go in and say, yeah, let's just go in all in on these stocks. I mean, we need to see some momentum turn before we start really getting crazy. But I mean, let's stabilize. Let's start to see, like Friday was good. Friday was a good tell for a lot of these names. They all bounced. So now let's say, what do they do at Friday's lows? Can they hold Friday's lows? Because if they can't hold Friday's lows, then, you're in trouble. So you bring up a stock like, I mean, you could go to Oklo if you want. Maybe it's the best example. So you had Oklo kind of bounced a little bit Friday, but then leaked again in the afternoon. Like, even though we got the bounce. So let's go to the intraday chart, Joel. We'll bring up your charts here. Trade
Sure.
Station. You can see Oklo open right at the low on Friday. opened right at the low around 94 bucks. It rallied to 106 in 30 minutes. That's a 12% rally in 30 minutes on no news. This is just the momentum, like, okay, now, that was it. That was, the bottom capitulatory, it looks like at that point in time. But the concerning thing here is that it couldn't even hold the gains for a day, and by the end of the day had almost leaked all of those gains back. So the overhead supply is so powerful in these stocks that sell the rip is working way better than buy the dip ever did. So I would say, even though you had the buy the dippers coming Friday morning, sell the rip was all over it and wouldn't allow it to continue to go higher. And actually at a certain point in time started taking over. And in the afternoon, despite the S&Ps holding up fairly well,
Yeah.
a lot of these momentum names did not.
I noticed that too when I was catching up on my homework here. I looked at like the S&Ps and I'm like, well, they backed off the high, but then I looked at the Qs and they really backed off their high later than the day. But just the other thing too, and just catching up on like the research and everything. I think what a little bit the worry now, and I'm going to go to Oracle, and is that they got these deals, right? And they need to build out, and they're going to the market to look for financing. And I think that the debt and the financing for all this stuff, I think people are like, whoa. Wait a second here. Where are those contracts coming through? Do we want to be on the hook for this debt? And I think, there was a lot of things with Oracle when it was battling and everything. But if you go back, I mean, the money to build all these mega data centers that are going to be the size of, 3 times the size of Michigan Stadium, man, you're going to need some money. And if the money is not there, if it's not coming from the financing, right, can you do them? Can you build them? And now that with the rate cut now, less 50% here? I mean, you're worried like, hey, you know what? No one wants to finance these deals at this point. And I think that's the major
we can
concern.
speculate on all that stuff.
Yeah.
And, and maybe there is some fundamental reasons for like, maybe there was pull forward. Maybe, we've talked about all of these things and we can say, oh, this AI rally has just been overbought. I mean, the bottom line is it was. I mean, stocks don't go up 300, 400, 500% in 4 months, Joel. I mean, the moves are ridiculous. Like, don't even worry about the fundies. Just talk the technicals. Stocks just don't go up this much without eventually having an inevitable ugly correction. And that's what we're in. We're in the corrective phase here right now. So I agree with you on a lot of these things. Like, maybe there's a certain point where, even memory. Memory has gone bananas. Brentster, you've been pointing this out. Talk about this with SanDisk and Micron. The moves in these stocks are absurd. I don't think Micron has ever had a move like this in the entire history of the stock. I cannot remember Micron having a period where it's went up 150% in 2 months. This is like your main memory company here. It's very cyclical. But if you look at the history of the chart, look how absurd that looks on the bottom right chart. I mean, it's just went bananas. So, is this sustainable? If absolutely not. It's a cyclical business. DRAM pricing will eventually come back in just like everything else. And when it does, Micron price stock is going to collapse. SanDisk is the same thing. And it's more pronounced in SanDisk even. It was $46
for a long time. For like a long time.
It's $254. Like, what the hell is going on? Like, and this is a problem, and it probably brings us into a good note from Morgan Stanley here this morning, because memory is creating some problems potentially for some PC makers, and obviously Dell and HPQ being 2 of those. We think of Dell servers too. Memory's there as well. But MS has a note here this morning. Let's just go to that. They downgrade both Morgan Stanley and HPQ and HPE all to underweight. Actually, no, just Dell and HPQ to underweight, or HPE to neutral. But the analyst commentary note here, and I didn't have this on to go to this soon, but it's the big note of this morning, is pretty interesting. So analyst Eric Woodwing goes from overweight to underweight on Dell. So he goes from a buy to a sell on Dell. Analyst commentary: Dell AI server mix component cost inflation to pressure margins and valuation. And if you dig in, this is a memory issue. Dell is one of the hardest hit stocks from rising memory costs in our OEM universe, and we're reducing our fiscal year 27 gross operating margins by 150 to 220 basis points because of memory cost increase. So I mean, you're putting it together, and memory's costing you way more. You can see in the Micron price and the SanDisk price. Eventually, it comes for Dell, and I mean, and potentially HPQ. But it's so interesting that it takes a note to point this out this morning, because here's Dell trading down $8. Like, oh my God, we didn't think of that. Is the market this stupid? Like, are we at this point in time here now where it has to be pointed out? I mean, memory has been going up here for 4 months. Like crazy. SanDisk and Micron just ripping. Yet, oh my God, nobody can think that maybe this is not good for some of these PC makers here. So the note makes a hell of a lot of sense. But, I think this market where the people who say, oh, the market looks out 6 months, 9 months and knows everything, those people have no idea what they're talking about. If somebody says that to you, just ignore everything else they're saying. They have no idea what they're talking about. This is the stupidest market that I've ever seen in my life. It prices in nothing. It's all because it's algorithmic market making. It's short-termism. Nobody gives a shit about the long term. I know I just said that, but that's what the market is right now. It's YOLO. You only live once. I want to make the money now. I don't care about making 20% a year. I want to make 20% today. I need to go have fun today. That's what this market has become. It's become so hyper-focused on short-termism that it doesn't see any long-term picture at all. And that's just the makeup of the market participants, with short-term traders dominating all trade. Like, now you're at a point where the institutional money manager, who's voting with real long-term thinking dollars, isn't influencing price like it used to. It will change, but the speculative nature of this market here right now is very high, and that's why you see these bubbles and these stocks go absurd prices and price to sales. We say it doesn't matter, this doesn't matter. It all eventually matters. But in this market, it hasn't mattered. The question is it starting to matter?
Just real quick, I didn't throw this in the introduction. Our charts are brought to you by TradeStation. And on my little excursion, I met with some wonderful people at TradeStation. And we are going to be working with, and I had a sandwich. Oh, boy. I don't want to tell you the sandwich I have because I don't want Lisa listening, the chicken BLT. But it was great, and we're going to be working with them a lot, working with this platform. The Brentster was working last week, working at TradeStation and stuff. I got them going. So,
it was fun. Thanks for helping with that, Joel.
Yep, a lot more TradeStation to come. This Dell move to me is wow. I mean, I want to say it's overdone, down $9 on a double downgrade after coming off the 165 level. But man, do you want, momentum? Do you want to? I mean, the momentum was on the upside. Yeah,
people didn't realize it. Like, people don't think it. People don't think about it. I'm still long Dell. I've been long it for a while. It's my acronym. I've had a long-term account, but I mean, it makes perfect sense. No, it makes a hell of a lot of sense. So if people start thinking like that, they're like, oh, didn't think about memory costs. I mean, it's only one component too, so let's not go crazy here. They're talking about 220 basis points. Not like Dell's going to go out of business because of this. But I mean, it's a big piece. Like, it's an issue. So I think there's lots of things to think about. But I don't know. Like, I mean, stocks just have went up so much. I mean, some have went up, and Dell maybe not the one, but Dell's went up a lot too. $50 back in 2023. It's kind of moved a lot too. There's lots of things to consider here when you're thinking about this market from a long-term perspective. There's a lot of inefficiencies long-term.
Okay. All right. We're trying to go green here. Only down 3 1/4. Looks like we're going to have a chop. I mean, I don't even know why we're here today and tomorrow, right? Because everything just depends on Wednesday. But I guess we have to continue with our regularly scheduled program until then. How about Warren?
Yeah.
Warren getting down and dirty. He said, I just got on that Google.
I don't know. I don't know that he did.
So.
I don't think he did. I don't think this is.
Don't think so.
We're convinced that this is new guy.
New guy.
This is not Buffett. This is new guy.
I think so.
So I know why people are saying Buffett buys Google out there. That's how you're going to hear it in the media today. Yes, but do we know it was actually Warren?
I can with 99% certainty say this was not a Warren pick. You want to know why? The bottom right chart, or even the top right chart. Warren Buffett does not buy. Think of his saying, buy when there's fear out there. Think about, he is the most contrarian investor of all time. He really is. Kathy Wood, she's the opposite. This is a Kathy Wood show. She loves them when they're just flying high like that and paying nosebleed valuation. Not that Google's nosebleed valuation, but he does not buy the top right. Like when stocks are at all-time highs, that is not Warren Buffett. Think about like UNH. That was a UNH was a classic Warren Buffett pick. Stocks beat up. It's like, there's fear in the street. People are all throwing it out. Throw the baby out with the bathwater. Back in the financial crisis, Warren Buffett backing up, buying banks, buying stocks. That's his style. It's not his style to buy a stock after Google has just run up 50% in the last 3 months. This is not his style at all. So that's what was shocking about this Google pick. But then when you think about it, is it really shocking? I think this is going to be a change of the guard here. And this really shows it that the new Berkshire Hathaway is probably not going to be run like Warren Buffett ran it. It's probably going to be a little bit more sexier name, a little bit more maybe, like not so much value oriented, but more a little bit more of a growth focus to it with maybe some value involved. I mean, Google is the kind of stock, it's a value, kind of a value growth mega cap tech. So that makes sense. It's the timing of the buys here where we're looking at again. So I shouldn't say that because, we don't know when he bought, so it's not like, but still, even if he bought, let's say back to September, I mean, the stock is still way up from where it was in April. So, I mean, it would still have been trading at all-time highs. So no matter when he bought it in the last quarter, he would have been buying at all-time highs. That's really not Warren Buffett's style.
What would it be the worst thing if Berkshire Hathaway was a little sexier? Do you think, Dennis?
I'm going to say yes.
Think?
I'm going to say
there.
Yes. There's a reason
you're
that
entitled
Warren
to your
Buffett
opinion.
is the best investor of all time, and it's because he's not focused on short-termism. He's not focused on like, oh, I want to make this money today. He sits back. He has his 6 Cokes a day, and he just has time on his side. Unfortunately, he got too old now, and time isn't on his side anymore, which is really sad. But I mean, that's what he's always had, is he's been willing to wait. And Warren Buffett has had periods where Berkshire Hathaway has very much underperformed the market. But over the long run, it works itself out because he buys great companies at reasonable valuations. That's what he does. He doesn't go pay 100 times sales for stuff. So I do think if they start to get away from that, I think it would be a bad thing. Now, is Greg able? We say new guy. We should give the guy credit. He's been there for a long time. So I just grab somebody off the street. Greg's been training under Warren Buffett for a long time. So we don't know. Like maybe he's going to be just as good as the Oracle of Omaha. But the the shoes to fill here are just, incredible. I mean, like you've got the greatest investor of all time. It's like basically, the Michael Jordan coming in after. You're going to be the rookie that's going to replace Michael Jordan. It's really hard. So he got the toughest job ever to come in here and do this. But I mean, he's trying to maybe come and do a combo approach. Google kind of feels like you're not paying 100 times sales. You're not buy Palantir. Yeah. So Google kind of makes sense. It's just the timing of the buy, because if he bought anywhere in the last 3 months, which we know he did, he was buying Google at all-time highs. That is not Warren Buffett's style. Warren Buffett's style is to buy when they're at like 52-week lows a lot of times, and then eventually the turnaround happens.
13Fs were from last week. 13F season is always by 45 days after the end of the quarter. So we don't know timing within Q3 that Buffett was buying, but it was sometime between July and the end of September. So you can look at your chart. It was trading at the very lowest around 170, at the very highest between that time around 250. All we watched was Berkshire Hathaway. When we were looking at the filings on Thursday and Friday of last week, there was other ones coming in that we were checking out and kind of interested in. Nobody really cared though. And nobody really cared like on Friday, right, Dennis? Like
bring up the rally here again. The overnight
rally didn't happen until the weekend.
This was the most laggard move. So we saw, and we broke this, Brentster broke this in on the STN room very nicely. He was one of the first to break, and he's like, Buffett just bought Google. And I'm like, holy. And I'm like, it's 281. And I'm like, this is like, why is it not popping more? I'm like, why is it not up more? And we were questioning it. And then I bought some, and I'm like, and then it went up a bit, and then it came back down, and it just meandered and kind of did nothing for most of Friday night. It started to go up after, but it was like 2 to 3 hours later, they were like reluctantly buying it. And then over the weekend it pops, and then Friday, Sunday night, because you get the craziness going on in Robinhood there. They bought us up to like 295. You don't even see those prints there.
295.
Yeah, it was like 294, 295. On IB, I saw 294.
I see.
So I mean, it was really got a little bit crazy. They're like, oh my gosh, Warren bought this. We got to go buy the stock on Sunday night. So I mean, we obviously knew this was Friday night at 4:05. We knew it right away. So it did end up going higher. I know Mike from the STN room had a great trade. He said he ended up selling. Mike was texting me. Actually, it might have got higher than that because Mike did really good on this one. He sent me the text where he sold it. And I know it was trading up there. Sold at 296. He sold 296 Sunday night. The Sunday night trade sometimes gets stupid. So out at 296. So it's 287 now. So he sold the top. So you don't even see that on the chart because this doesn't chart the overnight session from 8 p.m. to 4 a.m. So we're talking about, on the Robinhood session from Sunday night. But it just got really crazy. Like that was way overdone. So now you come back within range, 287. Kind of where it feels like it should be here. 281 was too low, 296 way too high. 287 feels like the happy place for this for Google. Thoughts, Joel?
292. It's all about 292, and then we can move on. Last month's high, 291.93. This month's high, 292.36. I don't even care about it. Traded at 296.87. There it is. That's it. If you want this thing going 300 bid, you need to take out 292. You need to get above it. You need to establish a bid there, and it just keep on going. But big move. Who knows? I mean, someone says average price is 170. I don't know about that, but all I'm looking at is monthly resistance at Google 292.
So the other thing that he did, he just sold DHI. So he's all out of DHI. And we know they don't care that much about the sales. It did trade down a little bit on it, but they don't really care that much. He did a couple other, smaller like position like adding and dropping. But
sold a little bit of Apple, a little bit, about 40 million shares, I think it was. Off the top of my head, I think that's what the number was.
Yeah, a little bit. But when you put it in perspective, it's a lot to everyone, but a little bit to him. Also, there was speculation that he might buy more UNH. That did not happen. So UNH was trading down a little bit. Action is still trading down a little bit here right now, but it was trading down on Friday night. They're like, oh, because people were speculating that Buffett would maybe buy more, and he didn't. So I think a little bit of a hangover there for UNH because he didn't buy anymore. So that's really what we need, just breaking it down. Is the Buffett action, because nothing else really moves. Like we used to look at all these 13Fs 10 years ago and be like, oh, this one's moving because of this guy. This one's moving because of this guy. It's just not the case anymore. It's like Berkshire is the only one that seems to really move price, and they don't seem to care about hardly any of the other ones. So, Berkshire, I mean, we can sit here for 13Fs and break them all down for you. The other ones don't seem to move price.
Mm-hmm. Berkshire 13F seems to be the only one that matters, and like the reduced stakes, the liquidated stakes, the raised stakes don't really matter either. It's kind of just the new stakes. That's just kind of the hand we're dealt with when it comes to these hedge funds in 13F season nowadays.
We did have a couple of. Oh, go ahead.
No, I just going through the whole thought process here. It'd be interesting to see what happens over the next couple months, because I think Warren came out and made some comments. Hey, I'm taking it easy. I'm kicking back and stuff. So, this is like the first really divergence, that you see was, him buying some Google. But let's see. I mean, what if he starts like peeling out of some Coca-Cola? If there's really going to be a fundamental shift in the way that, the structure of the fund, then he's got a lot of asset allocation to do. And you look at something like Coca-Cola and Bank of America and, some of these stocks have been there a long time. If he's going, you talk about rotation, you talk about the granddaddy of all rotations. If he is going to be redesigned, it's going to take if
he's going to go a little more techie, it would really change Berkshire Hathaway.
Yeah.
Maybe he just slowly does it, and I don't think he's going to go crazy, and I don't think he's adding Palantir to the Berkshire Hathaway portfolio anytime soon. So, but I do think that he's going to be a little bit more techie maybe than Buffett was. At least, I do you think this was a Buffett pick? We don't know. Buffett's going to say it was a Buffett pick because he's going to defend him. He's like, oh yeah, I was on board with this, but it doesn't look like a Buffett pick.
Well, I guess the thing that we haven't said here is this just changing? Like, are we, is Google mean differently to the market nowadays? Is Google just not techie anymore? I don't
Well,
know.
it's techie. It's just value tech.
If Buffett's
So
buying it, maybe it's not.
it's value tech though, Brent. So it isn't like he came in and bought something at 100 times earnings. So I mean,
Yeah.
it
No,
does
it's
kind
fair.
of fit in. So some people are going to argue with me, and they might be right that this is a Warren Buffett pick. It's the timing of the buy. If Google was in the gutter, I would have said yeah.
Yes.
But because it was at all-time highs, we know that in the last quarter it was just making all-time highs, making all-time highs. It just didn't feel like the timing of his pick was a Buffett type timing pick. That's all. So yeah, but I'm kind of with you, Brentster. Like, I mean, there's a lot to think about. There's a lot to chew on here, and we don't know all the answers, and we may never know these answers. So we had earnings.
Yeah, we got some earnings coming.
Friday night earnings. We never get Friday night earnings, but we had a couple. I think we should cover Hive. I mean, they're a sponsor of the show. Can we cover their earnings report here? HIVE from Friday night there, Brentster?
Sure, why not? Give me just 1 sec. Why don't I'll put up the overlay here. Here we go.
Yeah, here. Let's cover the Hive earnings.
Okay, sweet. Hive, I am just pulling up right now. I'll pull up the chart while I'm at it here. So Hive reporting an adjusted loss, 7 cents per share. Analysts were looking for a 1 cent per share gain. I don't know how many analysts cover the stock. Sales did beat 87 million. Analysts were looking for under 81 million. Shares here this morning trading up a couple percent or so.
Yeah. I mean, as far as technicals, I mean, look at the Bitcoin, very closely correlated with Bitcoin. And Bitcoin's come down, and so is Hive here to the $330, $350 area. So needs to stabilize here and turn back up, get back over that 50-day moving average at 477.
I mean, we look at the other miners and it's the same story, and Bitcoin drives the bus here. They are levered play on Bitcoin. So when Bitcoin's going up and making new all-time highs, the miners usually are doing pretty well. When Bitcoin pulls back, like it has recently, it's ugly. But I mean, looking at the miners like Mara, Riot, they're all breaking down. Same story. They had huge runs in September and October when Bitcoin was doing really, really well, and they've come off those highs significantly since then. So, if anybody can figure this out, it's Frank Holmes. But it's pulled back significantly from those highs. So we'll leave her at that for Hive. You had MSTR up there. I mean, that just goes down every day. Oh. That's not a miner. That is a Bitcoin holding company. We had Louis Sykes on last week, and he's just talked about this coming down to NAV. It's getting there. So, I mean, we are at a point where this traded with such a premium to NAV, but he actually pointed out, I believe he said, the day that IBIT came out was the day that stock peaked relative to NAV. So, I mean, you just had alternatives here now where MSTR was the only way to really get this, because if you didn't want to go and open a crypto account, you were getting your exposure through a vehicle like MSTR. That's over. With Bitcoin ETFs being officially out there now, why go pay a premium for those same Bitcoins? That's why MSTR has been in the gutter and coming back down, and it looks like it is going to NAV. 834. Let's get our guess.
Yeah. Let's get to Jeremy Schwartz. There he is, our special guest, Jeremy Schwartz, WisdomTree Chief Investment Officer. Jeremy, it's been a little while since we talked to you. How about these markets?
I miss you guys. Good to see you again. Great to be with you. Always something interesting to talk about.
Always something interesting to talk about, and you have put together for November the WisdomTree CIO market update, and holy mackerel, ton of information here that you wanted to cover. But there were a couple slides that you really wanted to focus on that maybe to help our investors navigate what could be a rocky end to the year.
Yeah, well, I think, one of the headlines I woke up to this morning was Gunlock saying 20% cash, saying, there's all this issues in private credit and trying to get more defensive. And last week, there's a lot of people who out there say, the valuations of the market are really tricky, and, so we now have a negative equity premium in stocks versus bonds. and just maybe a few of these charts. And this is something we do update every morning on our website. So if you like some of these charts, want to get back access to some of them, we do update a lot of the stuff. So this is just the historical S&P PE. We're looking at forward P's around 23 and a half. We used to have 30-ish. And so this comes back to, what's expensive. And, for sure people say, the tech, they're worried about tech in 2000. And so we model what we call the extended tech sector. And, because they reclassified tech. So like Google and Amazon and Tesla and all these others are not in the tech sector. So now, are you tech of 2000? I'd say we're less than half of tech of 2000. 30 times earnings is where this expanded tech sector. Now, this is half the market, by the way. So because these companies have grown so much between all the tech stocks and the sort of expanded tech stock, this is roughly half the market. But, X tech, you're something like 19 times. And this is sort of fair value for, 20 times earnings is a lot of what we say. But this is what the chart I was showing you guys that I thought when people say we have a negative equity risk premium today, we often make the point that stocks are real assets, that you can't compare the 10-year treasury to the earnings yield. You got to compare the real bond yields. So the real bond yields are below 2% today. And, so when you look at the earnings yield versus the real bond yield, that's what we call the equity risk premium, 2.4%. Yes, it's half as good as it was for the last 20 years, but we were spoiled. The bonds were such bad deals. Stocks were very, very good deals. 2.5% is, you could do better. We've done better. But, think about what it means to be a TIPS yield. So you're buying the inflation protected bonds. If you buy bonds, the mean risk is inflation. So you buy TIPS bonds, you're below 2%, something they taught us in school, the rule of 72. You take the growth rate, 72 divided by the growth rate is how many years it takes to double your money. So with current bond yields, it'll take you 40 years to double your purchasing power. 40 years. So are bonds such a great deal, Mr. Gunlock? Or, stocks. Okay, so 17 years at the current S&P, 14 years X tech. Now, it could be better than this. What is the case that would be better than this for stocks? Yeah. It's if earnings growth is kind of generally higher, than it was historically. Like right now, tech is the reason why you pay more for the Mag 7 is because their earnings. I mean, the last 5 years, Mag 7 grew 30% when everything else grew 14%, right? So you understand why you pay more. So, and even going forward, they're expected to grow 20 versus 12. So the question is, how much longer can they grow at above average rates? But, we definitely think they're warranted. This is not a tech of 2000 bubble. Stocks are still great deals versus bonds. But there's a lot of noise out there.
I mean, going back to the PE chart, maybe we could just scroll back to that one if you can there, Jeremy, because it was fantastic to see, because many people, including myself, even at times, have compared the current tech market with the tech market of 1999. But, this chart shows we are not there. Like, we are not close to those kind of valuations. We are not nosebleed where we're paying, $1 billion for a company that had, well, maybe we are at certain stocks. Maybe it is the tail two markets. I've been talking about that because there probably is some stocks that do fall on this list. It's not like all stocks are equal. And we do have some value stocks that probably trade too low of a multiple. So maybe the question is, are we there on some stocks?
I mean, that Mag 7 chart, this 2000 chart is interesting. I've been working with Jeremy Siegel for the last 25 years. When I first met him, he was calling tech of 2000. He called March 14th, big cap tech stocks are a sucker's bet. You can never justify these valuations. In his article back then in the Wall Street Journal, he had 9 stocks that he listed with triple digit PEs and said, these stocks are pricing in a future that you can never justify. You go back to my Mag 7 chart, there's only one stock with a triple digit PE, which was Tesla at 200. And so obviously they're not relying on just the car company. They're relying on all sorts of robotics and other things being the ultimate AI play. That is a different future than their current future. But at 30 times, it's, you understand why these other stocks are trading there. And, there, as you said, there's so many stocks that are well below normal. I mean, there, as just an example of, one
Yeah.
of my favorite expensive parts of the market, we have a fund that focuses on shareholder yield. WTV is the ticker. The average shareholder yield in this stock, these are dividends and buybacks, 7%. Like,
what stocks are in there? What do you got?
So it's a combination of a lot of different things. It's a more flat weighted stock. We're actually going through a rebalance process right now, but they have to do 5% buybacks. We've traded in and out of the big tech companies. It does own things like, it'll diversify just from the deep value names that are doing these 5% buybacks, but it'll have 20% in financials, and then a smattering of things like energy and industrials and some of it tends to be overweight consumer discretionary type names as well. But it's an interesting one.
Jeremy, there's different ways to, look at the market and the historical returns and the momentum and everything. But, there has to be a point, where sometimes and I don't like to use the word like nervous, but the price action like last week, I wasn't around for all of it. A lot of volatility and everything. If you haven't, talking to investors out there, and someone, you talk to them, they're like, man, I've been navigating this market pretty well. We're coming in the end of the year. I don't know about tax selling and everything. I'm nervous about the market. I'm nervous just about the overall thing. What would be the key thing? I mean, they'll say, I don't think interest rates are going down in December. What would you say to that investor?
Well, I think the sell-off last week was some of the repricing of the Fed. We do think the Fed should keep cutting rates. We think they should be another 50 to 75 basis points below where they are, but they're on the right path. They're going to keep cutting as we go into next year, particularly after they get a new Fed chair. They're going to likely to keep cutting. And so we do think they're a bit too tight in some sense. Like everywhere around the world, you have the central bank 75 to 100 basis points between their 10-year and their short-term rate. We're basically exactly flat. Normal, healthy yield curve slope is 120 basis points. So it should be much. You should have the 10-year rising or plus the Fed funds falling in some fashion. But so yes, last week, I do think some of it was the repricing of the Fed. And now we still have weeks before the meeting. So there's still more that can come before that. Maybe we start getting some data as the government shutdown, ends and we get some of the actual data coming in. But the big story has been this AI narrative. It's like this fear. It was Sam Altman did that interview with, Brad Gerstner and saying we're going to spend $1 trillion, and the quip about selling your shares to somebody else was not. That basically caused all this questioning. You see the CDS spreads of CoreWeave moving higher and Oracle moving higher, and questions: can these AI companies pay for all the spend and commit? Oracle sold off. Oracle was one of those fascinating stocks where right before its earnings, it jumped 30%, and now it's below where it was pre-earnings. We happen to really like Oracle. Actually, we think that's one of our AI stocks that we think could be still a good place, like as a core infrastructure stock that has upside. But that is the real debate.
There's the case here now that's flying around in social media, and the CNBC was breaking it down last week, that Oracle's taken on too much debt here now to try to finance some of this stuff, and the debt is actually getting hit in the credit markets here, and Oracle's going to have credit concerns, which sounds absurd to me here. Is this just this media just blabbing around trying to find a story here? Because when you look at how much the bonds are down, they're trading at 93 cents on the dollar. It's not like we're trading at 50 cents on the dollar here. So, I mean, what are your thoughts here on, has Oracle taken on too much debt?
We'd be more of a buyer than a seller, for sure. And that's one of the things that we're looking at in, as we rebalance our portfolios. We have an AI fund that's adding to that position. And we're coming up to rebalance, and we're looking at that as well as some other strategies. So I think it's one we like. We do think the market's overreacting to some of that pessimism. They need, what you see, I still think we're early. Like this whole debate of where are we in the cycle is there's a ton of spending, And the question is, can they all meet it? But there's an arms race to get the compute. And now you say, all right, well, and you saw some of the headlines out of China, like, you saw the DeepSeek moment earlier in the year when Nvidia was down 20%, was, we might develop some tech that we don't need as much chips. And so that feeds into it. There was a story from an Alibaba company called Moonshot that developed some new models. Will that mean, another example like DeepSeek where you get more efficient, you don't need as many chips? But there's an arms race to get as much compute in as possible to service all these AI stories. And that's not slowing down. We're very, very early innings of this whole build out. And so, we're believers in that story. And we believe it's not just going to be NVIDIA who benefits. It's going to broaden out to everyone, like literally everyone. And people will find out how to do more with less. You're hearing that from Walmart CEO saying, we're not going to hire, we're going to try to use AI. You're hearing it, and you're going to continue hearing it. And so that's one of the reasons to stay bullish on the markets, actually.
Jeremy Schwartz, WisdomTree Chief Investment Officer. Jeremy, we love having you on because you just don't talk about the U.S. markets, and you look around the globe to give us different kind of investments. Let's just talk about the China-India dynamic that's been going on. And boy, oh boy, I saw those headlines on Friday regarding Alibaba and intervening with the military to provide U.S. information. I saw Alibaba got hit here. But, spanning the globe here, looking at India, China, and also Japan, maybe after this historic run up in our markets, maybe there's other places to be looking as well.
Yeah, well, and I think that also in the headlines was Buffett buying Alphabet. One of the places he's been, or maybe it's his people, Todd or Ted, buying Alphabet. But the thing that he's been buying, and that he can't buy more of because he's sort of capped out at 10% ownerships, is some of these 5 Japanese trading houses. We actually targeted a fund to own like 50% of the fund in those 5 names. Our Japan Opportunities Fund, OPPJ. To me, it's like, I call it the anti-bubble. When the S&P is at 24, it's 12.5. It's basically not a single dollar is going into Japan, like, effectively. Like this year, hundreds of billions, maybe 100 billion internationally, not a single dollar net has been invested in Japan. And so there's so much apathy. It's still one of the cheapest parts. They got a new prime minister, Takaichi, who is now in the crosshairs of China. She wants to support Taiwan. And has made some comments about helping to defend Taiwan if there was something there. But there's a huge ramp up of defense spending around the world. That's sort of another one of these mega trends that we think is like a decade-long theme that's going to lead to tech innovation in Japan, in Europe, in Asia. They're going to spend a lot more on defense. But that Japan Opportunities Fund is one of my top ideas. And I know China's been hot, and I've been a little hawkish on China, but I think, there's this existential risk with China that is, is it worth the upside? And because India and China are the 2 top positions in emerging markets, like when one is in favor, usually the other is not. The last 5 years, it's been an India market, and China's been down until this year. And China's been coming back. Oh, we're going to get a trade deal with China. Maybe we get something. There's speculation we get a deal before Thanksgiving, around Thanksgiving. I think you're going to get more headlines like this Alibaba ties to the military story, and it's going to ramp up, is my sense. And, I think I'm not a big want to be in China. I'd rather be in Japan and India as my top 2 places for the coming, for a while.
Well, it's a great point. And I mean, we just seen this time and time again. I think of it too, because I am in some China here right now, but I do think like, how many times China stocks rallied 60-70%, and then you look at them a year later and they give it all back. I mean, it's just been, not the place to be for not like 2 or 3 years, for like decades here now. Yeah. I mean, Alibaba topped out at $300 in 2020. It's had some nice rallies and recently as well. But I mean, these rallies just continue to not hold. And is this just the geopolitical tensions are still there?
Yes.
Probably never leave, Jeremy? Like, is there a way to ever get by the geopolitical risk in China stocks?
Well, and you can say, hey, because there's a group of people like me saying that maybe you should go in because there's a, hey, that creates the opportunities. And last year was all about emerging ex-China. So all the ETFs all the flows to EM were the ex-China strategies. But I think for the next few years, it's just going to be, you got to be a nimble trader like yourself, Dennis, where you can come in, come out. It's not something to fall in love with. It is and I expect, in my view, the next 6 months, the tensions are going to ramp. You're going to be more pressure. We might get a deal. Okay, we'll get a trade deal before end of the year. But this story with Alibaba is not going away, and you're going to get more of that. And so I think that tension is coming in a bigger way.
Jeremy, before we let you go, we got the real Jeremy. They got that Jeremy Siegel guy on CNBC.
Oh yeah, look, you guys are both on two main
Turn that
networks
off.
here.
We got the real Jeremy.
Hey, Jeremy Siegel. Hey, Jeremy Schwartz.
Nice. We share good ideas all the time.
Okay, so man, just putting on, and I, we don't really press you for price targets or projections or whatever, but it just kind of seems like to me. And I've said this a lot and been wrong a lot, but I kind of feel like we're not going back to the highs. Like the high for the year is in. We're going to meander. There's been a lot of good news out there, a lot of uncertainty out there. I don't know how tax loss selling is going to shake out because there's some stocks that have got absolutely annihilated here. So, look at where we started the year, the volatility, everything we have, the perspective of being a couple hundred points from the all-time high here. How should investors approach the rest of the year and then move it into 2026?
Well, for sure that tax loss selling is one of the key things. I mean, we started with our very high level that there's definitely places that it's well warranted. I'm not, trying to hide out in cash. I don't think that's, I still think there's good long-term value, even though the market's expensive by historical norms. There's good reasons why the tech stocks are where they are. And I think you're early in that adoption. So I don't have long-term worries. The short-term worries, I actually do think that China story is the biggest short-term risk because you saw what happened in April and all that tariff day was related to this geopolitical fallout. So that's, to me, the biggest wild card risk. More so than this AI story, because I do believe the AI story is real. I'm not worried about the spending on the CapEx and all that. I think that's all warranted and reasonable. It's this tensions flare up with China that leads to something more negative. But I think the broad market is pretty healthy.
Can I sneak in one more on you?
Yes.
Bitcoin. You talk about a risk asset.
Yeah.
You talk about a move. You talk about a counter move here. And it may be something that I wish we would have paid a little bit more attention to when the market was ripping up to all-time highs. And that just was kind of, everyone's buying the 150 calls. You got to own it. We're going to 150. We're breaking out. Now we're 6 digits here. How important do you think, just tempering the market, the price action in Bitcoin will be a determinant of the market for the rest of this year and into 2026?
Well, they talk about Bitcoin as digital gold. Gold's had itself a year. Gold has been one of the good places to be, and you're being bought by the reasons why people talk about Bitcoin. They're buying gold. Like central banks are actually buying gold. If you're China, you see what we did to Russia. You're buying gold, and so this has not been one of those heavily trafficked retail stories. Actually, I mean, I think even the gold miners are in outflows. So I think. Bitcoin has been at the leading edge of risk. You see, it's not fully separate from risk. It's like a key place where risk is trading. And there's just so many more unique things in Bitcoin with the leverage and, where you get these cascading sell-offs that take risk off. But, it's something also we believe in over the long run as just a new generation's version of gold. But it has more volatility. It's not this risk off diversifier. It's sort of at the bleeding edge of risk in many ways. And it's, you can say, is that a signal that we got to take risk down everywhere else that Bitcoin is leading? But we think that, there's a lot of positive tailwinds over time for Bitcoin. And so I think that weakness is actually a good place to start thinking about buying.
All right. Jeremy Schwartz, always informative, CIO at
Thank you guys.
WisdomTree. Thank you. We'll dial you up
Jeremy.
again, perhaps early in the new year.
Joel, I don't know what the hell's going on. You're back. You're in your chair. I physically see you, yet the market is going down. So the whole indicator is falling apart here, live on air. you know, in the last hour, we've dropped about 20 handles here too. So I don't know. Maybe we got to end the show.
There was a ridiculous move on Friday. I just want to tell you that I really tried to stay off the grid and not follow the market. And
it's hard to do.
you know, so you know, I saw the dump on Thursday, and then I dialed in. A Delta Wi-Fi is kind of hard to get, but and I'm just like, and it had this crazy. And I'm saying, wait, the low's in the 6,600, and wait, now we're at 6,800. It was really a mind-boggling move here. And so when I was preparing, you know, my levels, my market here, I'm like, we better stay up here because there ain't nothing below. And that's kind of what you're seeing now. So we're way off the low from last week, you know, and have nothing to worry about, right? We'll see what an NVIDIA earnings do, but you know, it's a slow leak here. People are going to use, you know, perhaps use this opportunity to reload for a year-end rally. But we only got a few minutes left here. Brentster, you wanted to hop in there with our sponsor.
Hive Digital Technologies. Thanks to Hive for sponsoring Pre-Market Prep. Industry-leading expertise in building, maintaining, and operating efficient digital infrastructure, geographically diversified operations situated in politically stable jurisdictions with access to low-cost renewable energy, significantly expanding global footprint with a path to 25 exahash per second and aiming to capture 3% of the world's Bitcoin production by the end of this year. Thanks again to Hive Digital Technologies. On screen right now, there's a little overlay in the bottom right corner. You can scan that QR code to get a link and learn more about Hive. Thanks one more time to Hive Digital Technologies.
It's just sell the rip. That's where we're at right now, folks. And I know like we're inclined to buy the dip, but that is what has been working in the last few weeks, and that's what I think continues to work here. So we're gonna get, you know, these bounces here, and there's gonna be buy the dip opportunities too. Buy the dip seems to always work at a certain level. You know, when you're talking bigger companies and you're talking, you know, good value stocks and stuff too sometimes. But I mean, just in overall trends, buy the dip. But sell the rip has its moments. And sell the rip is having a moment here. And that's really where we're at, is this market has so much overhead supply in a lot of these other names here right now that people are looking to raise cash on rallies. And I mean, don't look any further than what Joel was just talking about with Bitcoin. And Bitcoin has had a few rips here in this sell-off, but yet continues again to break down to new 3-month lows. And if we continue, I don't think the Momo names bottom until Bitcoin bottoms. That's what I'm going to say. It's all the same type of investor in there. So if Bitcoin keeps going down, there are so many overlaps into Bitcoin investor and Palantir. They're all in the same type of stuff. So if Bitcoin continues to go down, it puts pressure on Palantir, not because it's fundamentally related to it, it's because it's the same type of investor in there. So that are all about momentum and story. So I do think that we got to keep an eye on Bitcoin and the crypto markets here, because as this making a new low here right now makes you not want to chase these pops that we've just recently had from Friday on a lot of these momentum names. It's more of a selling opportunity than maybe a buying opportunity, unfortunately.
Folks, we're going to wrap it up here on Pre-Market Prep and go over to the STN room, stocktradernetwork.com. Want to just give a real quick preview of some of the guests that we're going to be having on Pre-Market Prep here this week. Tomorrow, Statman Do, Ryan Dietrich from Carson Group will be joining us at 8:35 a.m. On Wednesday. Al Cluse on Thursday. We're going to have our Hive Crypto Corner segment with Frank Holmes, none other than Frank Holmes. And then on Friday, I think every other Friday, Tony Pollock comes on from Real Life Trading. We love having Tony on. Real quick in STN, Jim Tassoni today. Tomorrow, Tommy Lackey at 10 a.m. Mark Chaikin on Wednesdays. Mark has been coming on every other Wednesday in STN. On Thursday, Jamie Stout with Capital and Capital. And then on Friday, Money Mitch live trading. Just a little preview there, folks. Some of the great guests that we're going to be having on Pre-Market Prep and STN here this week.
And obviously, we always have CC Legator on Fridays as well. We always have Trader Prad coming in on Thursday. We're continuing to build more content for you. And it's not just going to be locked behind STN. We're going to continue to bring you guys more content too outside of STN as well. With, you know, CC Legator's, our 1:30 show is always public here on this channel. Options Unchained. We love CC. We love our options content as well here. So what we're trying to do is build more content for you. That is our focus right now. That is our only focus, is building content here.
All right. Thanks for joining us on this Monday. Glad to be back on PreMarket.